Welcome to HR Dynamics. We provide practical and positive HR solutions. On the webinar today, Payroll, it's not a set and forget.
All right, we might get started. Welcome. My name is Deanne and this is Kylie. You've probably seen our faces before on our webinar. It's been a while.
It has been a while.
Have we ever done one together?
No, we have not.
Oh, you're in for a treat then.
I know.
So it's been, I think this is maybe my first webinar for this year. I can't actually remember if it is or it isn't. I wouldn't be surprised if it wasn't.
Yeah.
But I wouldn't be surprised if it is.
No.
2022 seems to have started in full steam, whether we want to call it COVID 3.0, 4.0, 5.0. It's certainly, I think every day we wake up going, what's going to happen today?
Mm-hmm.
Yeah.
Definitely.
So today what we're going to do is give you a bit of an update on 2022 so far and some of the hot topics that are circulating around, particularly with the award reviews that are going on at this point in time, because there's going to be some significant changes that are going to affect a large number of employers, particularly up here in Far North Queensland. We're also going to talk about STP. For those of you who don't know about that, that is Single Touch Payroll version 2, which is sort of snuck in under the radar.
It did.
And Kylie, being our accountant guru, has got all of the information, all of it, in relation to STP. So when that comes on, I'll be over here. Cool?
Yeah.
Yeah,
done.
Excellent. All right, team. So feel free to drop questions in the Q&A box and we will get to them at the end. If you're anything like me, when it comes into your mind, drop it in there. Don't wait till the end because then you've probably forgotten what the question was. All right, so let's get through. We've got some statistics and general information to start with. So underpayment of wages seems to be a very big focus for Fair Work. And whilst it always has been a focus, I think the prosecutions that they're making at this point in time are really high profile.
Yes.
There's a large number of big organisations. You may have seen a recent case with Shangri-La in terms of underpayment of wages. And there's all sorts of, I guess, things that you sort of start to come into your mind with underpayment of wages. We know it's complicated and we know that awards are difficult and it is easy to do. And it's a little bit frightening, I think, that if an organisation of that size can get it that wrong, it just highlights how complicated and how easy it is. And how easy it can be to have a really big cumulative effect because of something that was done a little while ago, which has never been reviewed or never been changed or never been checked. So I guess what we're really wanting to sort of talk through and emphasise is awards are not set in stone and they do change. And that is now sort of being evident by the number of prosecutions that are being made.
Yeah, that's right. I mean, you had the Coles case for, I think it was $125 million for salaried employees that were underpaid.
Yeah,
because their salaries didn't include what they were actually working.
Yeah, and it is almost this set and forget. And look, we're probably all guilty of it at some point in time where we've set something up and we've gone, yep, it's done, and we may not have done a review on it for a couple of years, and we've got things like classification creep, we've got award changes, and if it's never been changed, you get this accumulation effect where over a period of years, you start to talk about some really big dollars. Yeah. Every 4 years, I mean, it's a rotating cycle, but every 4 years, your award is going to be reviewed by the Fair Work Commission. Maybe 7 times out of 10, those awards slip through with no modifications or no changes being made. But this year, we are seeing some significant modifications being made because of that full-year review. The changes come out in what we call these things, these decisions by Fair Work, and this one here is about 12 pages, and that's just for the changes in the SHADS award, which we're going to be going through today as well. So they come out in very legalistic terms, and they can be quite daunting, but I guess that's why we're here, is to try and make it a little bit easier for our clients to be able to navigate what those changes are and plan for them. Because they're the sort of changes that you can't just implement overnight.
No, when we get to these SHADS award changes, they are quite large and quite going to have such a significant impact on employers.
Yeah.
So they need to needs to be consultation, it needs to be eased in, work out your processes, procedures, how you're actually going to put this in place.
Absolutely. And even though some of these changes don't come until the 1st of July, we know that between now and the 1st of July is just going to disappear. I mean, we're already at the end of April.
That's right.
Yeah, we were just singing jingle bells yesterday. So again, we can't reinforce it enough. You can't just set and forget. These things do change. I was working with a client the other day in terms of what we call classification creep. And this is a very real thing when you have a person come into your organisation that may start at the bottom of the classification structure, maybe level 2, level 1, and over a period of time they develop more knowledge, they take on more things, they get a bit more accountability, they get a bit more responsibility, a bit more decision-making influence within the business, but their classification's never been reviewed. So all of a sudden a level 2 is now a level 4, and we're looking at a couple of dollars an hour difference in pay increases. Or by virtue of the fact maybe the employee's gone off and done some training, which the employer's got a benefit from, but maybe even the employer didn't pay for the training.
Or didn't know.
And now the employee is actually operating in a higher capacity. So it is really, really important that an annual review of your award is part of your business plan. It's one of those continuity strategies. It's risk mitigation. You know, we do servicing of all of our company vehicles, and we get our properties inspected. We get the termites and the pest control people to come in to make sure, you know, we're all safe and secure. But sometimes we forget that say payroll system, award interpretation, all that back end data may not have been reviewed for quite some time.
Plus, also if you get new staff in, you know, someone new who's doing the rostering.
But that's the way we've always done it.
Well, I don't know if it's a new staff member who's doing the rostering, so you should always be checking to make sure that what you've rostered is actually what is being worked. And that's what is included in whatever calculations you've got.
There's so many facets to the actual review of it, and it's one of those things that does unfortunately tend to get forgotten.
That's right.
But never fear, we're here to help. So always give us a call if you've got any questions. Also, just what everybody needs and wants to hear, the 2022 wage increase is likely to be due in July of this year. We don't have any information at this point in time, but what we do know from past experiences is there's some very big influences that are going to affect how the Fair Work Commission comes up with the wage increase for July this year. The federal election is going to be probably one of the biggest things. What the Reserve Bank is going to do in terms of their interest rates and the CPI figures, etc. The Australian Industry Group and all of those employer associations, the arguments that they're going to put forward to the Fair Work Commission in terms of business recovery through COVID, cost of living. You're going to have the unions putting in their submissions essentially about the cost of living and the rate of inflation and wages keeping up. So there's some very big social arguments that are going to go into the mix for the Fair Work Commission to determine. And to be 100% honest, like, you know, this is just my personal observation, I would not be surprised if it's a 3.5% wage increase, but I also wouldn't be surprised if it's a 1.5.
Anywhere in between.
It
could be more, could be less. Yeah, no idea.
It is how it's like throwing a dart at a dartboard. What we don't know at this point in time is whether or not we're going to have any further staged wage increases. Obviously, for the past 2 years, we've had some variations in dates depending on industry and whether those industries have been more adversely affected by the pandemic of COVID, or whether or not they're going to bring everybody into line for the 1st of July. It has to happen at some point. It may very well be that some of those employers that got their last wage increase in November, they may get a, say, 1% on the 1st of July, for example, and the figures aren't exact, don't quote anybody here. They might get a section of the percentage on the 1st of July and they get the balance of it in November. Because there is a statement to be made that wages usually increase annually, but what Fair Work is going to do, don't know.
No.
And we're not likely to have that information out until June.
Around the 30th of June.
Ready for the 1st of July.
Ready for the 1st of July.
Yes, and then they put out the pay schedules and the pay guides and all of those things with some very tricky rounding in some awards. So that's another point. If you're going to sort of preempt, we might get notification in June of what the wage increases are going to be for the 1st of July or the first pay period after July. It might be 3%. If you calculate that, just make sure that before the pay scales come out or before you verified it, just make sure you go in and check the rounding. The difference of maybe 2 cents an hour, again, it's not much, but the cumulative effect of that could be something that gets you into a little bit of trouble.
And those wage increases are in effect from the first full pay period after the 1st of July. So if don't freak out going, we're not going to know to the 30th and then numbers come out to the 1st. It's whenever the first day of the full pay period starts, that's when the rates change. So
if my pay period is the 1st of July, freak out.
Yeah. You won't be paying till the 8th. So until then.
Yes, absolutely. And that's really important for you to communicate that to your employees as well, because the media comes out, they say 1st of July wage increases, everybody just expects that their wages will be increased on that date. So putting out some communication to your employees about when it is and what it is always a good idea.
That's right.
Okay, so watch this space in terms of the wage increase and see what happens. I think we should take a bet.
Do you?
Yeah, we could start like a pool.
Yeah, I reckon there's going to be 3 in it.
You reckon there's going to be 3 in it?
Yeah, high 3.
High 3.
I don't know if we'll make it to 4.
Oh, big call. You're not winning friends.
No,
here.
I know.
Definitely not winning
Given all the social conversations.
Yeah, absolutely. And I think federal election in May is going to have a big impact on what's going to happen in the industrial relations space coming forward over the next 18 months. Yeah. Okay, so why? We've got some statistics. We love statistics, especially Kylie, because she loves facts and figures. Looking at Fair Work and what they've recovered in terms of underpayments in the last reporting. So 123 million. Yeah, that's a big number. 25,000 workers back paid, 21,000, 22,000 completed disputes. So this gives you an idea of, I guess, the volume of transactions that go through Fair Work, and this is through the Fair Work Ombudsman. So the Fair Work Commission is the actual writer of the rules. Yes. So they manage and govern the Fair Work Act and the industrial awards and the national employment standards. The Fair Work Ombudsman is the police of that matter, so to speak. So this is where you'll sort of see these crossover of these two organisations. The Fair Work Commission will be doing all of the award reviews. They will set the wage increase. They do all the unfair dismissals, the agreement registrations and those things. Whereas the Fair Work Ombudsman really has that focus on compliance and making sure employers are doing the right thing. Okay. Out of those statistics, fast food restaurant cafes are accounting for 50% of total litigations with Fair Work at the moment, with a 1.8 million from 13 litigations in decisions. So that's including penalties. So we were talking about 1.23 million in underpaid wages, obviously 1.8. It includes obviously all of the penalties, the compounding, the interest, the enforcements that go with that. So underpayment of wages is one thing. That's the actual dollars that are owed to the employees that haven't been paid. But then you've got the penalties, potentially, some criminal, what's the word I'm looking for? Not activity, because we're not criminals, but criminal convictions in terms of wage theft is obviously also a possibility as well. The one in the corner here, which I have to just shift our faces from on the screen. So I'm just going to shift that there. The establishment of a sham contracting unit, which has recovered $364,000 in sham contracting from misclassification. Interesting. Yeah. I think this is probably going to be a big focus in the coming sort of 12 months and possibly longer, because contractors are almost like the poor cousin. The ones that sort of got forgotten about in terms of having any attention, and certainly now with the changes that they're making and the establishment of the sham contracting unit, it is really trying to police and enforce that contractors do need to be legitimate contractors. So when you're looking at what is a legitimate contractor, what are some of the things that you look for, Kylie, when you're talking with clients?
So I'm looking for what is the contractor doing. I'm looking at what do they have their own insurance? Do they have, whether if they're a sole trader, they've got their own liability insurance, have they got their own income protection? Are they working with multiple clients, or are they just working for the one for you as the employer? If they're only working for one, that's a bit of a red flag, absolutely, because you're effectively what that contractor is doing is providing labour. So then how do you distinguish it between an employee who's providing labour and a contractor that's providing labour if they're only working for one person?
Yeah.
Where they're doing their work, so are they doing it at the office, or the employer's office, or are they doing it at home, or are they doing it somewhere else that you as the employer have no control over? The other thing I look at is, can that contractor have a series of employees to do that particular work, and you as the employer won't have any really issues with it? So can that work be done by anyone, or is it only where that one contractor is? So there's multiple factors that go into it, and every situation is different, and every employer is different, every contractor is different. We want to make sure that they're a true contractor, because if they are not, then they can be deemed as an employee, which means you're underpaid, haven't paid any superannuation, there's tax to be taken out, there's all the accruals, leave entitlements, then you've got work cover that you've been underpaying, your insurance premium. There's a lot of impacts.
Yeah.
So it's really important that if you're going to do it, make sure it's right.
Yeah.
I know it might benefit you in the short term, but that short term gain that you might get could bite you in the bum.
Absolutely. And I think, some of the big ones that I look for, like everything that you've said, rectification work.
Yeah, that's a big one.
If it goes belly up or pear-shaped, or whatever it is breaks, who's going to fix it, and who's going to pay to fix it? That is one of the big criteria that I look at when I'm assessing if a contractor is legitimate or not. I also look at, does the contractor have the freedom to decide when work is done?
Yeah.
So if they're being dictated that you have to be here from 8:30 to 5 Monday to Friday, the more times that you sort of look at it and you go, if it walks and talks like an employee, it is an employee. So there are some things that you really do need to look at. It's really important that you are confident that you have legitimate contractor arrangements in place, and that you've got the documentation and a proper contractor's agreement to be able to facilitate that.
Yes, absolutely.
Yeah, because you still need to protect your own assets. You still need to protect your IP, all of your confidential information. So even they are a contractor, they're still going to have access to some of those things. So you want to make sure you've got some protection in place before the arrangement starts.
Definitely.
Cool. All right. Next. This is where I just duck out, and I'll come back in 5 minutes, because we're going to talk about single touch payroll, STP. Take it away, Kylie.
So single touch payroll was supposed to come into effect on the 1st of July 2021, but we're in the midst of the COVID cycle. So they delayed it to the 1st of January 22. What single touch payroll 2 is you're already probably doing single touch payroll 1, which is you're reporting when you do a payroll, you're reporting the total gross amounts to the ATO, and the ATO is then filtering that down into an employee's MyGov account. So they can see how much they've earned for the year to date. And effectively, it was one aspect of it was to replace payment summaries. That was one of the huge benefits of single touch payroll 1.
That's why when I go into my GOV thing at the end of the financial year, I don't have to wait for my PAGY thingy to come out. It's had a million names.
That's
it's
right.
already there, and it filters into the ATO if you do your own tax.
That's right.
What used to be called e-tax.
Yeah, that's right. And you don't even have to wait till the end of the year. You can go in and to MyGov at any point and see what you've earned to date. Yeah, okay, if you don't want to look at a payslip for whatever reason. So that was single touch payroll 1. So single touch payroll 2 is the ATO wants some further information from employers. So they don't want just the gross total amount anymore. They want all the information broken down into detail. So what I mean,
why?
Well, the reason why is because the ATO wants to be able to give that information across to other government departments. One of those, namely, is Centrelink. And so when Centrelink's doing an assessment of benefits that they can give people, they have certain criteria about what is considered income and what is not. And that criteria can be different to the ATO's criteria of what it deems income, right? So that's why I've put this. This is like the short version of why single touch payroll too, so that the ATO can filter all the detailed data through to other departments. Single touch payroll is very large. There is a lot to it. There's your bookkeepers and your accountants are going to be all over this because some payroll systems are already doing single touch payroll too, and some payroll systems are not yet there. So some payroll systems, because of JobKeeper, remember JobKeeper?
I try not to.
Yeah, I know it's painful, but remember JobKeeper, those payroll systems had to move very quickly to make sure their IT infrastructure could fix all of that, which delayed the IT systems, the payroll system, software systems, to be able to put this in place. So as a function that payroll software such as MyOb and Xero are not ready for payroll, single touch payroll 2. So haven't got their IT infrastructure in place in the background to be able to do all the detail that the ATO want to be able to report it.
Yeah.
So they're madly building all of that right now. Whereas other software systems such as KeyPay and QuickBooks, they are ready. And they have been ready.
So what if I change from QuickBooks to Xero just because I'm not ready?
You could do that if you really want to.
I'm not suggesting you do that. As a person who is not administering a payroll system, it sounds like an easy concept, but I'm not for a second saying that you should do that.
Well, sure, if you've got one employee, if you've got 500 employees, probably not a good idea.
Because the 31st of March has been gone.
It has. So you need, if you're operating on KeyPay or QuickBooks, you must be reporting all the requirements of single touch payroll too.
Yeah.
No exceptions, no real leniency, but of course we won't know about the leniency until they start picking people up about it.
Yeah, until they actually start sort of either having some test cases and we start seeing where people have gone wrong. It's going to happen.
Yes.
It very much is going to happen. And I do think that there is going to be assessments done, that take into consideration where employers have generally tried to do the right thing, but that's only going to go so far.
That's right.
That grace period is not going to last forever.
Yeah, and I think what we will likely see from the ATO is that because some software is ready, some it's not, that means not every business owner is in the same place. So I think they're going to be much more lenient until probably mid next year.
Yeah.
But we won't know until it's tested.
Yeah.
Now, if you've got software payroll system that's not, that I haven't detailed here, you're going to need to get in touch with them and ask them when they're ready.
Yeah.
To be doing it.
Because these deferrals are, I guess, legal deferrals. They're not a date that they just picked out going, oh, we think we'll be ready. These are dates that the ATO has provided to say we will give you until this date. So that is your cutoff.
That's right. And so an employer, if you are with Xero, you automatically have a deferral because the payroll system you have is not ready.
Yeah.
You can get a deferral if your software system is ready, but you as the employer are not. You'd need to speak to your accountant and bookkeeper about the deferral if that's what you needed or wanted.
Yeah.
So let's get into what am I talking about with single touch payroll?
This is the scary bit. I don't like it.
I know. So again, as I said, your bookkeeper and accountant will be all over this, and there's a lot to single touch payroll too, but I'm going to be talking just from a HR perspective when it comes to rates. So some employers out there will pay what we call a flat rate or an all-inclusive rate.
Or a salary.
Or a salary, that's right. That is also part of it. So what I mean by that is I would say, Dee, I'm going to pay you $40 an hour.
Woo!
Let's make it 50.
Oh,
right, because you're worth 50.
Let's make it 60.
Dee's worth 50. So I'm going to say $50 an hour.
Yep.
But it includes everything.
Cash?
No.
Okay.
Okay. We're not that bad.
We're not in that sort of negotiation.
No. So $40 an hour, I've just dropped it from 50 to 40. Woo! So $40 an hour, and I'm not going to pay you Saturday penalties. I'm going to pay Sunday penalties. I'm not paying you overtime. That $40 includes everything.
Yeah.
I'm not going to pay you allowances separately. It's going to include everything.
All right.
Okay. It's that sort of arrangement that we're talking about that will struggle to be, you'll be able to do that with single touch payroll.
So 2 points.
Yes.
You won't, there's two very different, I guess, jurisdictions here.
Yes.
So we're not saying that your $40 is not compliant in terms of fair work.
No.
And the law,
No.
that may be okay. But your $40 that you have agreed to under the Fair Work system to report on in the ATO system. So again, bless the government.
Yes.
You know, we've got two government departments, strangely enough, that aren't talking to each other and are asking for very different things for very different reasons.
That's right. And so with that $40 an hour, how it show up in the employee's pay slip is however many hours they did at $40 gross, less tax plus super. Right. What's going to happen in single touch payroll too is that they're wanting this disaggregation of income. That's the terminology they're using. They want to see what that $40 includes on the pay slip every single pay run. So, yeah, right. So you will need to have separate line items for ordinary time. If you're in, you know, if you have a Saturday penalty, if you have a Sunday penalty, overtime for the first 2 hours, the first 3 hours, after 2 or 3 hours, each allowance needs to be a separate line item on the payroll, on your payslip.
Yeah. So I guess when you try to break it down so it's more transactional, because when I look at this, I go, yeah, like, that's really, really hard. But I think what it's trying to reinforce, and I think that's a common message between all of these changes, really, you need to know how your rate is structured and what is included. So the $40, you cannot just pluck a figure.
No.
You have to be able to then break it down, whether you break it down from an annual rate into an hourly rate. And it may very well be that, you know, your $40, it includes compensation for a specific amount of penalties, but over the space of the year, from an award perspective, you're paying for those penalties.
Right.
Handshake agreements, you can't just sort of, again, pluck a figure.
No.
And I think this really ties into the changes that we're going to be talking about with the restaurant and hospitality as well.
Yeah.
Because the emphasis is, from Fair Work, gone are the days where people can just pluck figures.
No, that is 100% the case.
Yeah.
You cannot throw a dart at the dartboard anymore or have a gentleman's agreement.
What if old mate down the road's paying that?
Doesn't matter.
Right.
Because they're under the same requirements you are.
And just because they're doing the wrong thing doesn't mean it's doing the right thing.
That's right. That's exactly right.
As my 16-year-old would say, seems fair.
So yeah, this agreement of I'm just going to pay you that flat rate without any basis or calculations or mathematics behind it. And when I say mathematics, pulling information from the award, numbers from the award, without any basis to that calculation, that entire process is going to disappear.
And is it because, you know, potentially the likes of Centrelink, when we're talking about reporting of income, we mentioned before that there are different types of income criteria for Centrelink, ATO. Obviously, I'm a bit of a hesitant that it's designed to try and stop people lying about their income potentially in terms of things like child support, family benefits, or the other side, underestimating their income and putting themselves in a situation where they're going to be subjected to a debt of some description because they haven't understood.
Yeah, actually, I'm probably in the more positive side of things.
So are you.
I'm an optimist, so I can't help myself. But say, for example, and this isn't the case, but let's say Centrelink says deems laundry allowance is not income.
Yeah.
Right. So you've got someone under the clerical award, they get $3.55 every week because they have a uniform and that's their laundry allowance. Now, most employers in the clerical award will add the $3.55 to the salary or into the hourly rate, which is 9 cents an hour. They'll just kind of round up and say it's included. Now, you need to have that as a separate line item to show $3.55 in the clerical award every week in the payroll system as a separate line item, and let's say, for example, Centrelink deems that $3.55 for whatever benefit they're calculating is not considered income. So the employee is better off when they're getting benefits. Plus also, you know, people lie, employers lie, employees lie, everyone lies. The ATO has just been getting round pile numbers. They have no idea what that's made up of. And so this single touch payroll too will assist in compliance. So even though the Fair Work is not necessarily talking to the ATO, they will help each other out by having the detail that's required on a payslip now.
And I think it's going to come down, you know, when you're looking at things like those overtimes and those penalty rates, because there's some things that are called guaranteed earnings, and then some things that are essentially optional earnings. Some of it taken into consideration in terms of reporting. Yeah, that's right. So, I mean, it's really the ATO is really pushing everyone to be much more on the award side of things. And one of the key words that they're using in single touch payroll too is you do need to separate out everything that is known, and every allowance in the award is known. All the overtime and penalties is known. So they do need to be separated out. Now, one of the ways that you could potentially have a look at this and looking at it in a different way, and I've got this example here back to D's $40 an hour, not cash. If you did cash, it'd be a lot easier. Would be a lot easier.
Would it?
Well, you know, you wouldn't have to do this.
I know.
But not for a second suggesting that you should be paid.
No, I don't know anything. So you could be having, again, but it's also got, so this example I'm about to give is going to be, you do need to have the mathematics behind it and the calculations and the evidence behind it. So, you know, say it was $40, then you could have on the pay slip $25 an hour for the ordinary time, provided that's above award, $10 an hour for the overtime, $3 for that allowance, $2 for that, which shows at $40 an hour. Because the other thing that's going to come along is your employees are not going to be happy about having everything as a separate line item, because absolutely sure most of your employees are going to come and say, where's my $40 an hour? And you're like, well, it's there, but it's made up of X, Y, and Z. And they're going to be insistent and saying, no, we agreed $40 an hour, and then you should pay all the rest on top. So that brings me to the next piece here. Is if you're on MyOb and Xero, and those two are the most common payroll systems for small business owners, you have a little bit of time up your sleeve. Don't leave it till December or January. You need to start this now. You've got,
particularly if you're doing, like, you're going through your annual reviews. Like, I'm looking for all of these opportunities for employers to start to broach this subject, so it's not confronting to their employees, because when somebody gets something that they're not expecting or they're confronted by, that's the source of conflict. We want to try and avoid the conflict. So performance reviews, maybe even when you're doing some changes in when your July wage increases come through, thinking about how that's going to go on.
You know, I'll be looking at each employee's calculations. So if you do have flat rates, or we do have salaries, because this is also applicable to salaries. So most salaries will have an overtime component built in. We haven't seen yet how that's supposed to look, but have a look at each employee's calculations, see what is and isn't included in the flat rate. Start pulling everything out as it stands today.
It just smacks of the annualized salary calculations that were put into the awards in 2020.
That's exactly right. Definitely. So start pulling everything out now. Start getting the basis of your calculations. You can do this at the same time you're looking at your classifications of your team, the annual review. You can have a look at this also in July when the rates increase. You don't have to wait till July to December or January to do this either. You could do it today. You can do it as at the 1st of July. Some of our clients have decided that's what they're going to do. We're doing the calculations now. We're looking at what the numbers will be, not knowing what the percentage increase will be, but pulling everything out such that the payroll system will have each item as a line item. and then starting to have a chat to your employees. Tell them what the changes are.
And why? Capitalise on the fact that this is a legal requirement.
That's right.
You know, they're very rarely do employers actually get to say, because we have to do this. So our advice is to actually capitalise on that. So, and telling them exactly why and where the ATO is sort of driving this process from, so that if they then want to go and do their own research, they can. It's all publicly available.
That's right. So tell them what the changes are, why the changes are coming, what that's going to look like for them individually. So having a chat to them and going, so Dee, you know how we agreed to $40 an hour? We won't be able to do that anymore. Okay, well, I dropped it because you weren't performing. No, I'm joking. So, but you know, now it's going to look different on your payslip because I have to separate everything out. So you're going to see that it's going to have Saturday penalties, Sunday penalties, allowances.
Yeah.
I could even do up a mock payslip.
Yeah.
Of what it's actually going to look like for you.
Cool. Yeah. Look, I think that if you didn't do that consultation, you literally are going to drop a hornet's nest, kick it, and run the other way.
Definitely.
Yeah.
Definitely. And or what will end up happening is your employees will get stubborn about it, and you'll end up paying more, because previously you were paying $40 including everything. You're going to be saying, no, I want $40 plus everything.
Yeah. Okay.
So the more work you do now, the better and easier it will be for you later on.
As my dad used to say, the 3 Ps. Right. There was a question there from Kerry in terms of an over-award component. Does it go on a separate line item, or would that go into ordinary time? If it's just an over-award component that doesn't compensate or buy out overtime, penalties, allowances?
Yeah, really good question, Kerry. There is an over-award component doesn't need to be reported separately. That would just go into your ordinary time. Okay. So they have not made anything saying over-award components, because they haven't got that far yet.
Toil treated in STP?
Don't know.
Don't know yet?
No. I don't think there's actually going to be really too much different with toil, because toil is effectively overtime that's recorded. So
it's time that's banked and then converted to ordinary time when it's taken. So,
but the reason why it is toil is because it is overtime.
Yeah.
And so when it is paid out at overtime rates. When it's cashed out as a lump sum, but when it's taken, it's paid at ordinary time.
Yeah. So that would then go into, we assume.
Yeah.
It would convert to ordinary time.
Yes, when it's taken.
Yeah.
And then it'll go into overtime when it's cashed out.
Yeah. Okay. So single touch payroll, we're still a little bit grey.
Yeah.
It is coming, we know that, and we're hoping that as the accountants and bookkeepers, like the specialists in this field,
yes,
coming out with more information. Obviously, you being a member of professional associations and an accountant, are going to be able to keep us up to date.
Yeah, definitely. I think the other advice I just give to all employees out there is really have a long chat with your bookkeeper and your accountant. As I said, we're only giving you one small piece of single touch payroll today, because that's what impacts
that's our wheelhouse.
Yeah, our wheelhouse is the rates and the rate calculations. There is much more to it, so this is just a tiny piece.
Excellent. Well, that's enough boring accounting stuff today. Let's talk about changes to the Hospitality and Restaurant Awards. 7th of April, which is not that far away, the Fair Work Commission did their 4-year review of these 2 awards, and have proposed amendment to both the HIGA and the Restaurant Industry Award, specifically around salaries. So it goes back to that whole calculation and knowing what is included in your salary. These changes are due to come in on the 1st of September, and we will be obviously doing further information about that. But essentially, it doesn't impact the managerial absorption salary, which I think is clause 25 under the HIGA award. Yeah. It refers to the non-managerial salaries under HIGA and the Restaurant Award. And in a nutshell, it basically says that it needs to be 125% greater than the minimum wage, but it's limited to a 4-week roster cycle. So in that 4-week roster cycle, you can have 38 ordinary hours, 18 ordinary hours that attract a penalty rate. So that'd be your Saturdays and Sundays, and 12 hours of overtime. So essentially what this is saying is 125% is enough to buy you 38 hours of work plus 12. Okay. So it is basically saying 50 hours is basically your salary.
Yeah.
Okay. We did get one win, I guess, and that was the exclusion of penalty hours from 7 p.m. until midnight under Hygo and 10 p.m. to midnight under Restaurant Award. They're not included in those outer limit calculations. So essentially it is, you can do 38 hours worth of work, doesn't really matter when it is. But you've even got your 12 hours of overtime. So anything outside of that, your 125% is potentially not going to be enough.
Yeah, so I mean, when I was going through this, I was like, oh, this is too hard. Why don't you just do the calculation of exactly what you want?
Yeah.
And then you just make the salary based on what you actually want rather than going, I'll do 125%.
Yeah.
And then you constrain by the limits.
That's exactly right. So it's coming back to, you cannot now, you just can't pick a figure.
No.
You have to structure it. You must do a yearly review to ensure the employees are paid no less than the award, because quite often we say, oh yeah, we're going to build a salary of 50 hours, and then by virtue of the fact we had COVID, we had all these people calling sick and they ended up doing 55, so we've underpaid them. Salary, the magic word of salary is gone. Like it is, unless you are award free, really, and not many people are. You can no longer say, safely, I am a salaried employee.
Yeah. What I have changed salary to mean is salary means a prediction for the year.
Yeah.
So you need to do the mathematics behind it of a prediction of what that person's going to work. And then fast forward a year, you need to assess whether your prediction was correct.
Yeah. And so that means you got to have the timesheets.
Have the time.
You've got to have the records to be able to substantiate when these hours were worked. So I think that this is probably going to be a bit of a wake-up call in some areas. Maybe some of the smaller establishments where, you know, they've particularly paid like duty managers and that sort of stuff at an industry rate of 75 maybe, but haven't actually got the records.
That's right.
So there's a few things that are going to change in hospitality and restaurant. It's really something you need to start preparing for. So keep that in mind. 1st of September, you do have some time. The determination and the decision only came out, obviously, not last week before. So it is still very new, and industry bodies and likes of us have been pulling it apart, going, what does this mean? So what questions do we have? Where are our grey areas, and where are we confident we have an understanding? But it is going to be time for you to review all of your salaries and potentially even contracts of employment.
Definitely. Because your contracts of employment do need to have all the detail in there.
And it will tie into your STP payroll.
It sure will.
So you see this common thread.
I'm seeing this common thread
starting to emerge. Okay. So now let's talk about the SHADS Award. For those of you who do not know, the SHADS is the Social Community Housing Disability Services Award, hands down the worst award ever. And I love all of our clients that deal in social and community services, but whenever they ring and say, I just want to check the SHADS Award, I go, it is, I'm not joking. If you need some entertaining reading and you've never looked at the SHADS Award, jump on in, have a look.
It's got worse.
See how you go. So the determination for the 4-year review came out, and they are posing some, in my opinion, some significant changes to this award. The industry is hard enough. The award is hard enough. These changes are just the icing on the cupcake, to be honest. And again, we've got the likes of NUAS saying that they will pay for X, Y, and Z, and then it's not matched with what the employer's got to pay. So the services are trying to run functions to deliver essential services in social and community services and disability, and are not essentially able to get apples and oranges to meet together.
No, that's right. It's it was on the ABC this morning. They were talking about it.
Yeah. It potentially is going to affect the level of service that can be operated by these clients. It's going to affect number of hours that can be operated, because there is going to be some additional costs. So let's have a look at how we've broken them down. And again, the decision for the award changes is publicly available. If you want a copy of it, shoot us an email. We're happy to send it out. It's from the Fair Work Commission, 18 pages. It'll take you a little while to sort of work out how it's sort of structured in terms of how it amends the award, but once you get that, you'll be okay. So main changes are the introduction of guaranteed hours for part-time employees. Guaranteed hours has really always been there,
It has.
but now it's really in there.
Yes.
Introduction of remote work provisions, which I found to be very interesting.
Yes.
Then we've got some amendments to minimum payments for part-time casual employees, allowances, broken shifts, client cancellations. In my opinion, that's probably going to be the biggest change. And the definition of shift worker for the purposes of annual leave accruals. So there are some other changes. There's some reference to the pay equity orders and the equal remuneration orders in the decision as well. So if you're in the shads industry, all of that terminology is going to be like second language to you. So reading the decision and the determination is not, it's not going to be that difficult. The implementation of the changes, that's a different story. So let's try and break them down for you. The introduction of guaranteed hours of work. So this is the terminology that they are now using, guaranteed hours. And what it is saying is that before the employee starts, you have to agree on a regular pattern of work, including the number of ordinary hours to be worked, the days of the week, the starting and finishing times each day. That's always been there. And so there's probably some employers and participants on our webinar today going, what, how are we meant to do that? We don't know what our clients are going to need. And we fully get that. The industry demands and the award are two different things. So those two have always been there. What is new is things like the agreed pattern of work does not have to provide for the same guaranteed hours each week.
Yes.
So you might be working on a roster where you've got clients that run fortnightly. Yeah. Or 3 weekly. You could do a 4-week roster. Yes. Which gives the guaranteed hours. The agreement can be varied, essentially by mutual agreement, and it can be varied by a once off, or it could be varied for a specified or specific period in time. And the employer must not require the employee to work additional hours in excess of their guaranteed hours. That's new. The terminology is new. That's the concept is not new, but the terminology is new. Yeah. So it means if you've guaranteed a part-time employee 50 hours a fortnight and you roster them on for 58 because somebody's always got some leave or whatever, or you have given them 50 hours and you've got a training day, all of those things, the part-time employee does not have to accept those hours, does not have to work those hours unless they agree to them, which we know is difficult because the fluctuations in particularly like the disability support services sector, where you're at the whim of the client, that is quite challenging. Are there ways around it? Potentially. You know, I think as the industry progresses, the terminology will sort of fine-tune whether the use of IFAs sort of tends to get a little bit more airtime. That's an individual flexibility agreement. Not sure yet. Yeah. Also, what is new is the review of guaranteed hours. So if an employee has been regularly working more than their guaranteed hours for at least 12 months, they can approach you for a review. So Kylie, you're my employer and you've given me my little contract of employment says 50 hours, but I haven't worked 50 hours since the day that I started. It's always been 58, 60, da, 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 and I'm happy to do that. Voluntary acceptance, I've agreed to those additional things, that's fine. But I've never worked 50 hours, so I'm going to approach you and say, I want you to review my guaranteed hours because as a part-time employer, I've got an average of 60, so I think that I should be guaranteed 60. Sure. Okay. So Kylie looks at it and goes, right, well, she's maybe right, that's okay. I've got 21 days to respond, and the good old terminology is back. You can only refuse on reasonable grounds. Reasonable grounds, how long is a piece of string? But if the person's got a pattern, it's going to be very difficult for you to establish a reasonable ground. Yeah, unless you know that position's no longer going to be required, or you know a contract's coming to an end. That's right. Those sort of things that we've sort of been exposed to before. Yeah. as reasonable grounds. So this is going to be super important for you to have a look at in terms of your part-time employees. Okay, guaranteed the unions will be on this like no tomorrow, because in their opinion, part-time employees have been overlooked in the industry for quite some time and potentially used and abused in terms of fluctuating hours. Their perception is their perception. So I think it's probably going to come up quite a few times.
Yeah, and I think employers are going to really have a struggle for employing part-time people because of these restrictions.
Yeah.
You know, the industry itself is rife with casuals left, right, and centre. Then the government doesn't want you to have casuals; they want you to have permanent employees. But then you've got these changes to part-time, just makes it really difficult for employers out there.
Absolutely, it's round peg square hole.
Yeah,
and as I said, when I say the Shags Award is one of the worst awards, there is nothing. It's supposed to be a modern award. And there is nothing that fly to the moon and back. There is nothing modern about this award, other than they've actually sort of, I think, officially recognised the acronym rather than the full title of the award. It's hideous. Yeah, I'm not gonna lie. Okay, so that is guaranteed for hours of part-time. Amendment to minimum hours for part-time and casual employees. What's your take on this one?
Well, this was a bit of contentions when I heard on the radio this morning.
Ooh, I love a good radio debate.
Yeah, particularly because what is current at the moment is home care employees. Their minimum shift is 1 hour. Now it's moving to 2 hours, and how that's going to impact the clients who receive those services.
And home care could be
gardening, coming in, helping with medication.
Yeah.
It's not just in the disability sector.
Yes.
So for elderly residents that are home or their livings are still, so supported independent living. So yeah, it's a minimum now of 2 hours, not 1, which may affect the services of clients who use.
Yeah, particularly if their NDIS funding is tied and it's all structured around 1 hour.
Yeah, it may not even be NDIS funding.
Or maybe paid for by the client.
That's right. Yeah. So that's one of the significant changes. There's those minimum shifts, but it's minimum shifts for part-time and casuals.
And this, I think, has always been one of those, in my opinion, those grey areas about minimum engagement for part-time and casuals, because one was clear and one wasn't.
Yeah.
So
it's clearer.
Yeah, clarity is good, but
is it better? Oh, I don't know. I think there'll be benefits for some people and not for others.
Yeah. Okay, so we've got some new allowances that are coming in, and I must admit, I had a little bit of a giggle. It is quite interesting reading. So we have a laundry allowance that has come in where it is clothing, which is not just work uniform. So it could be, you might have a polo shirt as your work uniform, you've got black pants and black leather shoes, whatever. If the clothing is soiled in the course of the work, it's 32 cents per shift. So straight off the bat, I asked myself 32 cents a shift. So do I put it on my timesheets? Do I ask people to mark it down? What is soiled? There's no definition of soiled. However, it does say that you can ask for evidence. I'm not sure if you're going to get the clothes bagged up and put on your desk, or whether or not you're just going to get scrapings of the soil put on your desk, or photos. All sorts of things. The possibility is endless. It's one of those things where you're probably going, well, we'll just build it in to the rate. Let's go single touch payroll
back to,
and go, yes, we can, but how are we going to do that? 32 cents a shift. It's not 32 cents an hour. It's not 32 cents a week. It's per shift. Then you've got the repair and replacement of clothing. Again, not work uniforms, is soiled or damaged in the course of the work. So the employer is then responsible to reimburse the employee for a reasonable cost of repair and replacement. Look, again, I'm a pessimist when it comes to this sort of stuff, because I've been there, done that, seen it. And I have literally seen employees bring in nappies that they've mowed over in the park as evidence of unpleasant working conditions. And so I've seen it. I've seen it happen where, how far does this go?
Yeah.
So, you I've got my black pants on, which are not uniform, and I catch it on the kitchen bench and get a rip in it, the employer's got to buy me a new pair of black pants or pay to get it repaired.
That's right.
So how does this affect you? And it's probably not something that you've ever even thought of because it's not there.
Well, clearly somebody thought of it because now it's in there.
Clearly.
So, yeah, that's going to be difficult. It's going to be, you're going to need processes and systems in place to be able to account for that.
Or you just go uniforms, all uniforms.
Yeah.
But again, that's cost.
That is,
yeah.
Because you got pants, shirt, shoes.
All of the things.
All of it.
Yeah. Okay. On-call allowance. What do you reckon?
I don't know about this one.
Do you know about this one?
No.
We have got an on-call allowance where an employee is required to be on call by the employer. So you need to be available for recall to work, either at the work premises or client premises or from home. And I think that's probably the key thing, is because there has been an interpretation under the SHADS award where an employee may have to pick up the phone and answer a call, may not have to leave home, because the wording for on-call before was where the person had to leave and attend work. So there was always this sort of grey area about A, were they on call, B, were they recalled to work, and what arrangements applied. So we now have some clarity, but with that clarity comes some costs and some pretty big costs. So we're going to talk about that. Just hold that space.
So there has been a change to the amendment to broken shifts. So what is currently in place right now is that you can have a broken shift. So what I mean by that is I can roster D to work from 9 to 11
at $40 an hour.
At $40 an hour. All right, agree to that. And then I can also roster her later that day, and I can roster you, say, from 4 till 9.
Yeah.
Okay, so you're doing 2 shifts in a day. That's considered a broken shift.
Yeah.
Now, doing that, there was no allowance to you for doing that split day. With the changes, there is now an allowance to be paid. So in the example I gave of D, she worked 9 to 11 and 4 till 9. There's one unpaid break during that time. So she will now be entitled to a grand total of $17.53
per shift.
Per broken shift.
And so that, just to be clear, the 2 separate engagements equal the broken shift. So it's not $17.53 for the morning and it's not $17.53 for the afternoon. The fact that the time is broken once is $17.54 that day.
And there is also a second broken shift. So there's 2 breaks in the day. So if I had to work 9 to 11, let's say 1 till 3, and then from 4 till 9, there's 2 breaks in there.
Yep.
You would receive $23.20.
But only if I agreed to work those shifts.
That's right.
So I can roster somebody for a broken shift with a break, one break, essentially without their consent.
Yes.
But I can't roster for 2 breaks without their consent. So that has to be mutually agreed.
Yes.
Excellent. And that's straight out of the employer's coffers.
That's right. But with that allowance now has become some clarity about penalties. Do you want to do that now?
Knock yourself out.
Okay. So previously, or what's currently in the award right now, and we'll use the example that we did with D. So 9 to 11, 4 till 9. Now, that whole day, she finishes her last part of her shift at 9 p.m. So because she finishes after 8 p.m, it'd be considered afternoon shift penalties. Now, how
what, 115%?
112.5. 112.5%. And how the award is being interpreted currently, including by the Fair Work, is that because her day started at 9 a.m. and finished at 9 p.m. So the entire time she worked for that entire day would be at afternoon shift rates. So the 9 to 11 would be 112.5%, and the 4 till 9 would be at 112.5%. That's how it is right now today. with these changes coming into effect on the 1st of July and with this broken shift allowance, the not the ATO, the Fair Work have changed that interpretation. And they've now said that the 9 to 11 will be at ordinary time, normal $40, and the shift from 4 till 9 will be at the penalty rate of 112.5%.
Yeah. So when we said the allowance comes straight out of the employer's coffers, it's essentially robbing Peter to pay Paul.
Yes.
So you may lose a penalty in the morning,
Yes.
and you may then gain the allowance for the broken shift. My concern is that obviously a number of people in the disability sector, particularly,
Yes.
have been undergoing a review and potentially making some back pays for an incorrect interpretation. And don't get me wrong, that interpretation, if you read the award, you probably read it the same way. It's very difficult to interpret exactly how those things apply. But now over the past 2 years, particularly, there's been a bit more of scrutiny or a bit more of a torchlight or a spotlight placed on that. And a number of employers have actually made rectification of wages based on that incorrect interpretation, which now means that from the 1st of July, their interpretation originally was correct.
That's right.
Explain that to your employees. That's going to be the challenge, because we have to educate. Because we make these changes that make perfect sense to us, but then we don't, if we miss that step of telling the employees about what's changed, they get their pay slip, we get that confrontation, we get the conflict, we get calls to Fair Work, we get all of this stuff going on in the background, which potentially can be avoided.
Yes.
Does not apply to sleepovers. So broken shifts, sleepovers, two very, very different things, different award provisions. So we're only talking broken shifts. We are not talking sleepovers.
Yeah, sleepovers haven't changed and won't change.
No. So just keep that in mind. Introduction of remote work provision. This is new.
It is new. The whole thing's new. This whole section.
Yep. What's your take on it?
It's good. It's good. It's good. The piece I like about it is about staff meetings and staff training.
Yep.
In that it's a 1 hour minimum. What's currently in the award is that if you had a training session or a staff meeting, you'd have to pay the minimum shift length, 2 or 3 hours.
Yeah.
With the introduction of this provision, it's minimum of 1 hour.
If it's remote.
If it's remote,
So if they can dial in from home.
or they're doing training at home, the organisation has training, they're going to log on and do a certain level of training. Yeah.
The bad part
is the rest of it.
So we've got remote work and we've got on-call work.
Yes.
And you're going to need to get some clarity between the two. So on-call is where an employee is rostered on-call, they're paid the on-call allowance, and they are available to be recalled from work, either from home, like doing work at home, or attending to work premises or client premises. They've imported or they've put in new minimums in there. So if it's between 6 a.m. and 10 p.m., it's a minimum of 15 minutes. If it's between 10 p.m. and 6 a.m., minimum of 30 minutes. If the employee is not on call, so Kylie, you're at home, you're not on call, you might be my supervisor, for example, and I'm on call, and I've got a phone call and I'm trying to deal with it, but it's way, I need help. I give Kylie a call. Kylie, I need your help. You might talk me through it, you might make a phone call, you might log into some system and do something, I don't know. But because you're not on call and you're not getting paid an on-call allowance, your minimum pay is now an hour.
Yeah.
Which was not in the award before. And I remember talking to clients about, they had managers or supervisors or service leaders that have the phone and they just answer it. They don't have to leave the house, but they answer the phone. Watch this space, because now that is remote work.
Right.
Which was probably just an expectation of the job before.
That's right.
Yeah. So watch this space on that one. On-call, remote work, two different things. This one makes my spine tingle. The clarification, not the clarification of shift worker, we'll gloss over that one quite quickly. They put in a new descriptor. It used to be so many weekends. Now they've put in another one where it's or an employee works at least 8 24-hour care shifts during the year. So if your employee does 8 24-hour care shifts or more, they will now be a shift worker in terms of the annual leave, which means they'll get an additional week's annual leave.
Yeah.
Okay. Client cancellations, this is the one that makes my spine tingle, because clause 25.5F, and I know everybody in the social and community services sector, particularly disability, knows clause 25.F off the back of their hand. It's about 3 sentences long. It is now about a page and a half. Of requirements. So we've tried to summarise it as best we can. The old clause 25.F is gone and will be gone in its entirety, and it has been replaced. It now references 7 days notice of cancellation, whereas before there was 5 p.m. the day before.
That's right.
We're on 7 days now. You can offer other work or you can cancel the rostered shift. However, the kicker then becomes, if you cancel the shift, you get a choice of you either pay the employee for the shift or you give them make-up time within 6 weeks of the date of the cancelled shift. So this is drastically different. And it is going to change the way in which employees are offered shifts. It is going to potentially tie back into that part-time guaranteed hours where employees have had a shift cancelled and you haven't met the guaranteed hours, because now essentially you're going to be doing it in some way, shape or form. So this is going to have some, I guess, some huge budget ramifications, particularly how clients' NDIS funding or support funding is used if they're cancelling shifts, if they're cancelling last minute because of illness. It happens all the time.
It does.
I really think this is probably going to be the biggest change or have the biggest impact in the sector, but that's just my personal observation.
Definitely, I think it will too.
Yeah, and we work with a number of clients that work in under the SHAD system, and they range from very much that social and community services through to disability, through to crisis, and every sort of gambit between. Every section of the industry has its own nuances, but one thing we hear time and time again is client cancellations and the ability to cancel a client shift and what has to be paid. It's now going to be very different.
Yeah, it's quite strict actually, isn't it?
It doesn't give a lot of room, that's for sure.
No.
So if at any time you do want a copy of this decision, please just yell out, we can email it to you, it's no issue. That is essentially the summary of the changes to the SHADS award that is coming from the 1st of July this year. So that's the end of our slideshow. Yes. We will go to see if there are any questions from our participants today. Minimum hours for disability support workers, just hold the line, we'll check our decision and make sure we give you the right information. I understand it's 2.
Yeah, so this is what will be from the 1st of July. So social and community service employees that are not undertaking disability, it's 3 hours. Everyone else, 2.
Yeah. So because it's got that there, except when undertaking disability services, that's your exclusion.
That's right.
So that's your green light to go from 3 to 2.
That's right.
Yeah. Client cancellations for both permanent and casual employees.
I think it was only full-time and part-time.
Yeah. So at this stage, our understanding is casuals, no. Will a copy of our webinar be sent out? Yes, it will be available. It has got the little record button going on in the background, so we will make it available to anybody who does want a copy. Let me just check our other one. We've spoken about toil, the reviews for them. No other questions. Geez, we did a good job. Look at that. If anybody has got any questions at any time, please feel free to reach out to Kylie or myself. We're both based here in Cairns, and we have a team obviously on the Sunshine Coast as well that will be able to assist you navigate these changes. So please don't hesitate to reach out. We've just got one more question. Where employees are paid above award and not paid leave loading, as this is covered by being paid above the award, will leave loading need to be reported separately?
So firstly, there's two parts to that. So if they are under the award and they're entitled to leave loading, then they're entitled to it. And it sounds like what you've done is included that in a much higher amount. And the answer is yes, it will need to be reported separately. Everything that's known needs to be reported separately.
Yep.
That's the easiest way to remember about it.
Easy.
Easy.
Clear as mud. Yeah. All right, team. Well, that leads us to the end of our webinar today. Thank you so much for joining us. We hope that we have given you some information that hasn't, completely made your head spin. Like I said, people usually only call us when they're having a bad day, so they don't usually like what we have to say, but we try to at least do it with a smile. We try. Give us a call. We're here based in the office in Cairns, 40517307. I would love to remember that, or I'm sure that you've got most of our email addresses. So thank you so much to everybody, and have a good Wednesday. Enjoy your long weekend if you're fortunate enough to get one, and we'll see you again soon.
Thank you.
See you.
Thanks for listening to our latest webinar. Remember, if you ever need any HR help or support, please reach out.